What's going on? We finally here?
We in there. What's going on, bro?
What's going on, man? I'm doing pretty good. Hold on, let me make sure I structure this right so we can look good. Hold on, how is that? I'm not even that tall and I look too tall. Hold on, let me get this structure right so we can get it in, man. I appreciate your time sharing, coming to share your knowledge and wisdom, man. I know a lot of people who follow us can use your experience and use your service. So I really appreciate you coming on here. Now it seems kind of crooked, man. Let's get it in.
Yeah, absolutely. No, I appreciate you having me on this platform, man. I appreciate everything that you're doing and putting out the knowledge, motivating us, the next generation of Black millionaires, current millionaires. So no, I definitely appreciate being on this platform, man. Congrats on all the success and everything, man.
Yes, sir. I want to before we jump in any type of tax strategy or anything, I like to talk about the person and just educate people on how you got to where you're at, because we all have a story, we all have a journey, and a lot of people, small businesses, are going through their journey right now trying to figure it out. So just tell people how you got into becoming a CPA and taxes and all of that.
Yeah, absolutely. So really, my name is Michel Valbrun, CPA. Also go by Money Making Mitch. So if Michel's too hard to remember, you can call me Money Making Mitch or Mitch. I go by Mitch as well. And yeah, man, I originally, I'm from South Florida, and my parents, they came from Haiti to the United States, and really they had a dream of having their children be able to achieve bigger and better things than they did in Haiti. And actually both of my parents are entrepreneurs. So I've kind of been exposed to entrepreneurship, but with my upbringing and everything, my dad ended up leaving me at a very early age. So I never really got any kind of game, any kind of jewels, any kind of like information on what I need to do to set myself and my family up for financial success. So going through that, I went to school. I always knew I wanted to be an entrepreneur. So I actually went to the University of Florida, got a degree in accounting, thinking that was going to help me learn about business and money and everything. But even with that, bro, I went through the whole program and I still didn't really understand money the way I thought I was going to understand it. I did learn a lot of business foundations, theory, and it helped prepare me for the corporate environment. But as I became and started working, I didn't really know the things that I needed to do. So I did a lot of research. I did a lot of self-development work. I spent like thousands and thousands of dollars just learning and developing. And through that experience, I became a CPA from that. And I also was able to learn a very unique niche, and I think super, super important too, working with business owners and being a business owner myself. I really learned and realized that business owners weren't getting the information and knowledge to help them save money on taxes. And with that, it was funny, like as I was going through the process of becoming a CPA and becoming an accountant, I volunteered. Actually, and I used to do taxes for free for people, for like lower income individuals. There was a program called VITA. And most of the people, were lower income, but there was like this business owner that was in front of me, and they had a question about business taxes. And, I didn't really know how to answer the question. I felt uncomfortable, even though it was free. She wasn't giving me any money about it or for it. I felt uncomfortable not knowing. And I dedicated pretty much, the last couple of years of my life making sure I understood, dug deep in the tax code, and now I've helped entrepreneurs save $10,000 to $100,000 in taxes legally and ethically, and that's pretty much my story.
Yeah, man, I really appreciate you, man. I really appreciate you. I'll be looking at some of your content. I actually saw the live with you and Ash Cash. And
oh, you're on there?
I have to watch this live. Like a lot of lives you come in and you leave out. I'm like, no, I have to watch this live, because in my business is growing. I'm making a lot more money. And, I obviously need to talk to somebody about taxes, because death and taxes are the only thing guaranteed. So I appreciate you coming on here. I want to start out with a question about just small business in general. When people are starting out, everybody talking about get an LLC. But what people don't realize is an LLC does not have a tax. Like, it's not a tax code for an LLC. No. You have to actually elect what tax code you want. So talk about that, because people get that misconstrued and don't really know what they're talking about.
Yeah, that's a very common misconception. It's even funny. It's actually not even fully understood in the accounting world. And just to quickly share with you, so there's actually, believe it or not, there's like actually levels and different types of accountants and tax preparers and all that kind of stuff. So people get in there just because someone's doing your taxes doesn't mean they have that in-depth knowledge about taxes. Because again, they don't teach you that in school. They teach you in school. They teach you how to become and work in the corporate environment. Even as a CPA, you don't learn a lot of the business tax rules. It's more on the corporate side where you're working with Fortune 100 companies, making $1 billion. The average business owner is not doing those kind of numbers. So the rules are different and everything. But yet, to your point, there's what's considered a legal entity and there's a tax entity. Okay, and they're two very different things. So the legal entity actually has no tax implications for you. Okay, so the legal entities is going to be your LLCs. They have the sole proprietorship. You have corporations, etc. Those are going to be your legal entities. And then on the other side of that, you have your tax entities. So you have your sole proprietorships, you have your partnerships, you have your SCorps, you have your CCorps. Those are the things that impact your taxes. Like, that's why a lot of times it's funny, like when you first start off and you get an LLC and sometimes people are filling it out and be like, why is it calling me a disregarded entity? And it's not, and it's called disregarded because it's disregarded for tax purposes. So that's why it's called disregarded. So it's just literally the benefit. One of the main benefits of having an LLC is it protects your personal assets. So if something were to happen in your business, let's say someone were to come to your business, whatever the case is, they can't come after your personal assets. Can't actually creates like a separate individual, separate protection, and it protects your personal account. So that's your bank account, your savings account, your retirement account, all those things. It keeps it separate. So that's the purpose of the LLC. And then, yeah, as you mentioned, you can elect to be, you could be an LLC taxed as a sole proprietorship. LLC taxed as a SCorp. The sole proprietorship for an individual, that's kind of like the default. So you're like off the rib, once you start off, you're automatically like a sole proprietor. That's kind of like the default tax entity for you.
Yeah. Now, what do you think? Just working with all these small businesses, what do you think the biggest mistake that small businesses make in regards to getting a CPA or just working with taxes in general?
Yeah, there's a ton of things. So one, just to even take a step back, a lot of entrepreneurs, and I get it too, like when you become an entrepreneur, you have your business idea, you're not really thinking about taxes. Like, you're just thinking about trying to get the money, trying to get the sales. People are making money. You're not thinking long-term how is this going to impact you from a tax perspective, which is fine. Like, I get it. Like, when you're first starting off in business, you're just kind of hungry to make money. But if you really break it down and look at things, and this goes for individuals too, taxes are like your single largest expense. Like, when you make money, you have to pay income tax, right? When you buy something, you have to pay sales tax. Right. When you buy property, you're paying property tax. Right. When you sell the property for more than what you bought it for, you pay capital gains tax. Right. When you die, you pay estate tax. So you're getting hit with taxes left and right. And a lot of business owners miss that, and they end up overpaying in taxes because they don't know the different laws and different strategies that are available to them as a business owner in order to reduce their tax liability. So that's one thing that I've noticed. Another thing that I've noticed is, and it kind of goes back to the understanding, is people, sometimes entrepreneurs, they get a little bit aggressive when it comes to saving money on taxes. So sometimes they'll put deductions on their tax return that they didn't really have, and there's no reason to do that. There's plenty of there's hundreds of strategies in the tax code that you can legally and ethically save money in taxes. So that's another thing. And the last thing is kind of what I alluded to before, is that there's a distinction between different kinds of accountants and different kinds of people that are involved in the tax industry. For instance, so you have a tax preparer. So tax preparer is just an individual that's going in, they're taking your numbers, they're putting it into maybe a tax software and sending that off to the IRS to file your taxes for you. And we need those individuals. So those are going to be your people at H&R Block, Jackson Hewitt. There's a lot of programs out there that are getting people into the tax business to prepare your taxes. And then you have another level, right, which is the CPAs. And the CPAs, they've gone to school, they got a master's and a bachelor's, they've done 150 credit hours, they have to take continuing education, et cetera, et cetera. And then, but even those are not enough for you, especially as a small business owner. So I've come up with this, there's another group for this that I came up with, that I realized, and that's called the tax elite. All right. And that's actually an acronym that I created. So elite. So if we look at it when you're looking for an individual to help you as a business owner, individuals, it could benefit you to work with these people as well, but definitely as a business owner, you want to make sure for the tax lead, you want to look up their education, okay? So did they go to school for taxes? Did they go to school for accounting? Do they have that foundational knowledge that you need in order to really have that in-depth knowledge? Another thing that you want to look for is legal representation. So the only people that could represent you in front of the IRS from a tax perspective is a tax attorney, a CPA. Those are the individuals that can help you, and an EA as well, which is an enrolled agent. All right. So if you're not working with any of those individuals, then they can't represent on your behalf to the IRS. So that's the L part. Then you have the I, which is intangible. So it's kind of like pretty much there's a whole bunch of things. So when I say intangibles, I mean, have they worked with a ton of clients? What have they done? What are the receipts? Like, do they have experience, like real life experience? Like, who have you helped? What industries have you helped in? Because depending on the industry, you have individuals that are doing real estate. That's going to be completely different from someone who's just making shirts or whatever, someone who's in the food industry. Right. So you want to make sure that you have that match with someone who has that experience. The other part too is that T is the training. So are they doing continuous training? So one of the requirements to be a CPA is that you have to take continuous training. You have to do what's called a continuing professional education. And if you don't, then you lose your CPA license. So I'm required every year to do a certain amount of education in order to maintain that CPA license. And the last part, kind of like you mentioned, is that experience. Like, how long have they been in the game? Are they just starting off? Are they kind of new? Or are they interns? Whatever the case is. So those are I think the 5 components that you need to be looking for when you're looking for a tax professional to help you save some money on taxes.
Now, when should business owners get a CPA, accountant? When should they get them? Because a lot of times you're starting out, you're like, you don't really have revenue projections. You're not really making a profit. Then business flips and you're making a profit and your revenue triples. When should you really seek out that help? Because if you don't have any revenue, is a CPA going to turn you down and say, hey, you don't even have anything to work with? So when should you actually reach out to someone?
I say, honestly, like yesterday, as soon as possible, because you want to have that game plan going forward. Because what happens is a lot of times small business owners, they end up overpaying in taxes. And when I say overpaying in taxes, what that means is that there's really, when it comes to the tax code, there's certain things that you could do during the year to save money on taxes. So then when the next year comes for you to file, there's only so much that tax preparer can do for you. They're going to be looking at it and they're just going to be like, I mean, you got some deductions over here. I mean, you did this, but you don't have the receipts for it. So I don't know if I could put that on there. Like, so you want to be proactive with that. Now, to your point, honestly, there are going to be a lot of CPAs who are probably not going to mess with you because you don't have that revenue. One of the things that I do is I open, I pretty much, I keep my calendar open to talk to whoever, whatever, and I can assess. And a lot of my clients, I have clients who have not started a business that are just thinking about having a business. I have clients who are doing in the 6-figure range that are in their business. I have people doing millions and up in their business. So all different levels, but definitely, if you are looking, if you think you're going to be in business and you think that you're going to do at least, I'll just put out at least 50,000, which I think should be anyone's goal. You definitely want to consider talking and jumping on the phone with the CPA. Not saying that you have to spend a whole bunch of money to have that conversation, but at least reach out, do your research, see who be willing to work with you. For me, I like to work with my clients on a long-term basis. So versus like tax prep, and it's not a shot to the tax prep people, but tax prep is more of like a transactional thing. Right. Like they just want people in and out. Boom, you got your return. All right. Give me the 300 to whatever they're charging. So it's in and out. There's not that ongoing relationship where they're communicating with you throughout the year, where they're giving you advice and giving you proactive strategies. So that's kind of how I like to build with people, is pretty much the short answer to that.
Okay. And what do you say to people who say, hey, I got a small business. I don't need a CPA. I got TurboTax. I got this tax software that I input my numbers in. What do you say to that? Because when you go on there, they have some type of deductions and things like that you can qualify for. But I know it's a lot of money being left on the table with those softwares.
Yeah, 100%. So those softwares are pretty much created for like middle America. I'll be honest with you, if you're working a 9 to 5, you have no aspirations of becoming an entrepreneur, having a business, making under 100,000, maybe married, just one kid or whatever, then your tax return is not going to be that deep. You could probably do a TurboTax. But if you have a business, like the world of deductions and the things that you can do with that opens up for you. And with TurboTax, again, like let's talk about this year, for example. You're doing your thing in TurboTax this year, 2020. Whatever happened in 2019, that's what you're recording. But if you didn't know that you can hire your kids, if you didn't know that you can write off your home, if you didn't know that you can write off a whole car, if you didn't know that all these things that you could have done in 2019, then it's going to be too late for you. You know what I mean?
Yeah. So another thing is a lot of people working from home. So what about the home office? How do you even go about writing that off? How do you prove you have a home office? What do you do for that?
Yeah. So the home office, there's a couple of requirements for the home office. So if you have a business, the majority of business owners could write off the home office deduction. So there's two ways you could do it. There is the simplified method, which is like 5 times, it's pretty much $5 times 300 square footage, or you can do more of a portion of the home. So with the home office, you have the whole square footage of your home, and then whatever the square footage is of that office space, and it needs to be exclusively for business. So you can't go in there and have a bed in there. You can't go in there and do personal things in there. The room, the space needs to be exclusive for your business. Then you could deduct a portion of that. So the way it works is, let's say the square footage of that home office is maybe like, let's just call it 300, and then the total house is like 3,000 square foot, right? Mm-hmm. So then that's 10% of the mortgage interest, 10% of the property taxes, 10% of utilities, all those. There's a whole list of taxable expenses that you could use with the home office that you can allocate. So actually it's money that you're already spending, right, for your home, and you get to take advantage of that home office, or you get to take advantage of that deduction. And that's something that, again, if you didn't know that, and sometimes TurboTax will walk you through that, but maybe you may have missed it for whatever reason. You wouldn't know to go back and look. It's like, let me make sure the home office was in there because I know I can take that.
Right.
Now, one of the caveats with the home office is too, you do have to be profitable. So if you don't have a profit, then it doesn't really, they kind of exclude it. But that's something that you need to know as well. So and that's why, again, it's important to work with a tax professional to break that down for you. It's like, because you may be looking at it thinking that you're supposed to get it, but then you don't get it. So
now, do you have to be a homeowner in order to write that off? Say you're profitable from, like me, I don't own a home right now. I'm profitable from my apartment, right? I can't write that off. I have to be a homeowner. Or is that what you're saying? Or you can write off anyway? No.
So you can write off if you rent or own the home.
Okay.
So if you have an apartment, you can do it too. The thing with the apartment is it's a little bit trickier because, again, usually the way it's set up is you got your own room, everything's in the room, the bed's in the room, everything's in the room. But that little corner, right, where you got your computer, you got your, you know what I'm saying, you got your business stuff over there, then yeah, you could take a portion of that. Now there's instances, right? So I've had clients who may be staying with their parents or living with their parents or with a girlfriend or whatever the case is, then you can't really do it. But yeah, if you're renting, if you are definitely if you own a home, yeah, 100% home office all day.
How does that work? Hiring your kids for tax purposes and tax advantages. I saw a lot of questions talk about, what age limit does the kids need to be and things like that. I don't have children, but that's a great question for a lot of our viewers because they have children.
Yeah, absolutely. So that's one of the beauties with the tax code is they actually allow you to deduct and pay your children through your business. And the way it works is this. So the age limit on it, there's an age limit, but I'll give you the rules. So basically, if they're under 18, Then you could pay them through the business,
Right.
up to 12,400 or whatever the standard deduction rate is, or standard deduction number for that year is 12,400. You can deduct that from the business. You don't have to pay taxes on it. They don't have to pay taxes on it, and it's basically write off for it. There's no age limits. I typically try to, the youngest I personally feel comfortable going is maybe 5, 8, and if you're going to go that young, you can't just blow them out and give them 12,400. Like they're gonna be, because you have to give them a job description, you have to give them a rate. It has to make sense for the age, right? So a 5-year-old, you can have the 5-year-old take out trash, shred it for you, put in the garbage can or whatever. You give them maybe like $100 a month or whatever. So yeah, you got a nice little 1,200 write-off. Some people try to push it. They try to do 12,400. Maybe let's say that you have a child that models, right? So maybe you use your child for, maybe you put them in a commercial on your website or whatever. You pay them out that way. But again, you're pushing it. But if you were to do the model thing, for instance, it can't just be on your phone, right? So like sometimes, you know how people put their kids on the Instagram, it's like, that's my model. I'm gonna write them up. I'm gonna pay out. No, it doesn't work like that. So you need to get a professional photographer. They need to take the picture. There needs to be expenses associated with it, and that's how you're able to do it. So that's how it works for 18 and under. If they're 18 and over, then you have to give them. You could still pay them through the business, but you have to pay them a 1099, and they're going to be responsible for those taxes.
Mm-hmm.
So you know what I mean. That's something to consider as well. But it's a great way. Let's say, one of the ways that people do this is they actually use it as a way to pay for their children to go through school.
Yeah.
You know what I mean? So you can, sometimes parents are paying their kid through the school and they're getting no benefit from it other than, you know, their kid getting a degree.
Right.
If you do it through the business, you not only pay for their school, you give them money, you actually have them work, so you having them, you know, kind of help the family business or whatever the case is, and then they can go ahead and take that money and, you know, that'll be like a 1099, and they'll have to do their own tax return for that and everything.
What's the tax implications on hiring an actual employee versus somebody 1099? Is it a benefit to the business owner, or is it just more of a short-term, long-term perspective?
Yeah, that's a great question. So there's a huge distinction between, so you have what's called an employee and you have a contractor. So with an employee, you have to pay them, they have to get paid out through a W-2. So you have to pay payroll taxes, they have to pay 7.65, you have to pay employer. And with the W-2 workers, well, so I'll leave it at that. So you have the W-2 part. Then you have the 1099, the contractors, and those are the people that you just pay straight up, and they're going to be responsible for paying the taxes on it. Now, most business owners are going to want to go the contractor route because you don't pay any taxes on it. You get the deduction, boom, you figure it out, you handle it, whatever. Now, the thing about it is the IRS knows that, so like, no, hold on. They look at the nature of the relationship. Are they coming in at a certain time? Like, do you have them coming in from 9 to 5?
Right.
Do they report to you? Do they as a contractor, you have the flexibility to do whatever you want. So you can come in and out, work when you want to. Like as a CPA, I'm a contractor. Whenever I want to get on and do the books or whatever the case is, or do taxes or whatever the case is, I have the free will to do that. If you have someone that's like on schedule, on then there's a whole bunch of requirements, then you have to pay them a W-2. And then you have to pay the taxes on that.
Are the kids a W-2 employee? When you try to hire kids, are they automatically W-2, or do they do 1099? How do you do that?
Yeah, so they are. So you do have to put them on payroll. That would be a W-2, but they wouldn't be responsible for, you or the child wouldn't be responsible for what you call it, the taxes on it. Okay,
now I have a personal question. So when I first started my business, when I transitioned, moving to Atlanta, doing the whole thing, I started an LLC, and I got it taxed as a corporation. I never made any money. I took a loss on my taxes every year because I was just really starting out. Now I'm profitable with my current business. And when I first was starting out, I was getting invoices and everything paid to my first LLC. And then I realized, okay, I want to actually incorporate. I want to take it to the next level, do everything right. I might have investors. I might have partners, all that. I want to get the company. So I got incorporated with my current business now. How do I go about that in terms of tax implications? Because I was getting paid through the Black Millionaires platform or whatever to my personal James Hill International LLC. And now, you know, I'm actually transitioned over. So what do I do about that? Do I just say, okay, that little money, and just let that go to my LLC, or can I actually count that?
Yeah. So if you have it sounds like you have a corporation, like a C-Corp now?
Yeah, I have a C-Corp now. And I still have the LLC. So that's another follow-up question. What should I do with that?
Yeah. So with the C-Corp, one of the great things with the C-Corp is it gets taxed at a flat 21% tax rate. One of the things with the C-Corp is what you're probably going to want to do is you're going to want to pay yourself a salary if you're trying to take money out of that. So that's the thing with the C-Corp. The C-Corp is, to your point, it's usually for individuals, like you said, who want to get investors. That's really the benefit of it. I would say 90% of entrepreneurs, they don't need to go all the way with the C-Corp. And the tricky thing with the C-Corp is once you go C-Corp, if you want to go back, you got to pretty much dissolve the whole thing or whatever. So it's kind of hard to untangle, but that's what you need to do with the C-Corp. If you stop the LLC as an S-Corp, one of the requirements as an S-Corp is you have to pay yourself a reasonable compensation. So you have to give yourself a salary out of that. So depending on how much you make and how much effort, it depends on a lot of different factors, then you would have to pay yourself a salary. You would have to pay the payroll taxes on that. Now, the interesting thing that you did, I'm not sure, you know, what your numbers are, but usually for most small business owners, what I would say is when you start off as an LLC. That's going to be, again, there's no tax implications, but you have your legal entity there. So do the LLC, then probably start off as a sole proprietorship. If you are confident that you're going to make more than $50,000 in profit, not revenue, but in profit for the year, then that's when you want to make the switch over to an S-Corp, because then you don't have to pay what's called self-employment tax as a sole proprietorship. So you don't have to pay that 15.3 automatic tax on the profit with the S-Corp. You just have to pay the taxes on your salary, boom, and then you're good to go.
So the S-Corp and the C-Corp obviously are two different things. What are the benefits of that? Because right now I'm in a C-Corp. And now you just explained the S-Corp, but that's interesting. I had a few people ask me questions about that. I did a live 2 days ago, and I'm like, yeah, I'm not an accountant, so I'm not going to be on here trying to give advice on whether they should get an S-Corp or not. When should somebody get an S-Corp? Because that's not really talked about a lot. We talk about LLCs all day, and then, you know, you be big time. You talk about corporations. But S-Corp kind of get left out. It's kind of like the middle child. So when should an entrepreneur elect to even consider an S-Corp?
Yeah, that's a great question, and I love the fact that you said elect, because that's exactly how you do it. So yeah, you have the LLC, which is your legal entity, and then like you said, you have your sole proprietorship. Let's just say you're an individual, so we're not going to consider like partnerships, but let's say you're a sole proprietorship, S-Corp, and corporation. You're like, okay, which one should I go with? So like S-Corp is kind of a middle child, and it's actually like the best of both worlds, because what happens is with a sole proprietorship, it's a pass-through entity. So are S-Corps. S-Corps are pass-through entities, which just means that the money from the business goes onto your personal tax return. So that's what the pass-through means. So you have your sole proprietorship. Let's say you have $50,000 in profit from your business, and let's say you're a sole proprietorship. So you have to pay 15.3 taxes on the $50,000 that you made from the business. So with the S-Corp, you no longer have to pay 15% on that $50,000 in profit. You would have to pay pretty much 15% on whatever you pay yourself in that business. It's based on what they call reasonable compensation. It depends on how much money the business is making, how much effort. It depends on a whole bunch of factors. But let's say you just pay yourself $30,000 for the business, because you have to pay yourself, because you're just like, because they don't want you to completely avoid the taxes. So you do have to pay yourself as an employee, and then you only have to pay it on that $30,000. So when the reason it makes sense to switch over to the SCorp is when you have at least $50,000 in profit, maybe even $40,000 in profit, because that's when that's kind of like the break even point.
Right.
For like, if you try to do it from the beginning, it's not going to benefit you that much. But when you start when you start doing bigger profit numbers, that's when it really makes sense to do it. And the great thing with the SCorp is they actually, and not to say this is a reason to do it, but they actually get audited a lot less than the sole proprietorship. You know what I mean? So if you're worried about getting audited, maybe it might make sense to go switch over to an SCorp, because if you're going to go, basically there's a couple of things. So if you're going to go all the way to an SCorp, they'll be like, okay, this person is like, they're serious. You know what I mean?
Yeah,
like you're not just going to make you're not just going to wake up one day and say, I'm going to make an SCorp. Like, the SCorp is a big deal because, one, you have to file extra tax papers on it. So you have to file what's called a 1120S. You have to record your income on there. You got to record, the balance sheet. So it gets a little bit complicated with the sole proprietorship. What happens is a lot of people, they try to finesse. They know that you can deduct things on taxes, so they'll just put a whole bunch of deductions on there and try to take losses forever. And the IRS is like, nah, come on. Like they know what's up. So then you get audited and you get hit with red flags, and it becomes a big issue. So that's when it makes sense to do the SCorp. So yeah. And then the CCorp, like I said, honestly, for most people, it doesn't really make sense. I think the times when it really does make sense is, again, if you're looking for those outside investors, you want to get people to, you want to put out stock and issue stocks and potentially, grow to be, on the stock exchange and all that. And then also too, let's say that you're at this crazy high tax rate. So let's say maybe you live in California where the taxes out there are crazy.
Right.
So you live in California, you're at the 37% tax bracket. So you're doing like $500 plus in income, like take home, like salary, paycheck. You're hitting I think it's like 500K plus on that for the 37%. Then sometimes what some people do is they do create a C Corp to be able to reduce some of those taxes. But again, for the most part, I would say sole proprietorship, S Corp are going to be your best two options.
You talked about stocks, so let's transition over to like capital gains, because we have a lot of people who are interested in the stock market, trading, long-term investing, things like that. So what do new traders or new investors need to learn about capital gains, because they're taxed different and there's different implications? And then I got another follow-up question once you answer that.
Yeah. So really, when it comes to stocks, that's an interesting area, because there's different kinds of investors. So you have people who are day traders, and that's kind of more of like, your it's pretty much your job, your hustle. Then you have more of like the longer term investors, like they put money into maybe like an Amazon or whatever the case is, let that sit for a couple of years, cash out, sell the stock later. So one of the things with stocks is, if you're that day trader type person where you buy, sell, buy, sell, buy, sell, that's going to be that's going to be a short-term gain. That's going to be taxed as ordinary income. So whatever your tax rate is going to be hit as ordinary income. If you're a longer-term investor, it's going to be considered capital gains, and that reduces your tax rate. So you're going to be hit with either that 15%, or I believe it's 25 or 20% on the capital gains. So one of the things that you can do as an investor, if you're trading stocks, is there's a strategy called tax loss harvesting. All right. So with tax loss harvesting, one of the things that you can do is, let's say that you're ready to cash out. Let's say you got into Amazon early, and you're just like, yo, I'm about to cash out. Like, I know, I feel good about it. I'm about to cash out. And then you have this huge gain. You got to pay capital gains tax on that. So one of the things that you can do is you can look at your portfolio and say, okay, this Carnival stock is not doing it for me. Like, I'm losing too much money. I got in at the peak and it's all the way down. and let's say you have 1,000 gain on the Amazon, you got a 500 loss on the Carnival because cruises are pretty much done with, at least this year, then you can offset that and it could reduce your tax liability.
Mm-hmm. Now, when you're trading stocks, let's say I want to trade stocks, right? Should I go get an LLC or should I just do it under my own, like just under my own personal account? What should I do?
Yeah, if you are doing it as like if that's like your livelihood, like if you're doing it on a day-to-day basis, you jumping in and out of it, then yeah, I would say, you know, probably you could set up an LLC. If you're doing it for like you just kind of buying stocks here and there, doing more of like a buy and hold strategy where you're holding it for a longer time, you don't really have to do it that way. One of the things that you can do actually is, and this is like a whole different conversation. We probably have to have like another live to talk about it. But like with a self-directed IRA, one of the things that you can do, so you have like the traditional 401k, you could do that through your job. It's kind of limited to what you can invest in and what you can do in. Right. If you created like a self-directed IRA, which is a retirement account, individual retirement account outside of your job, like a Vanguard, like a Merrill Lynch, like there's a whole bunch of Fidelity, Charles Schwab, whatever. You invest in those kind of accounts and you can use that and actually invest. One, you could take a tax deduction, so you have up to $6,000 that you could deduct if you're under 50. But then you can use that account and use that to invest in different stocks. You can use that to invest in homes. You could even, there's people out there who are using that as an investment vehicle to trade like concert tickets. So when a concert goes out, they buy it really early and they flip it on StubHub and they charge us like 5x, when we're trying to get those Drake tickets or whatever the case is, and we have to pay all this crazy money. It's because some people actually do that for a living, and you can potentially do that like in a self-directed IRA as well.
How do you save taxes being a homeowner? A lot of people here own homes. That's obviously an asset that the common person, even if you're not an entrepreneur, you own a home. So what are some strategies people can at least take from this live and say, hey, maybe I need to look at this. Maybe I do need an accountant to figure some of these tax strategies out.
Yeah, absolutely. So one thing with the home is, let's say you don't have a business in general. So you have what's called the itemized deductions. Okay, so with as a single individual filer, you can deduct up to $12,400 as your standard deduction. A standard deduction is pretty much the deduction that you get off the bat, just for filing. You just pretty much, they reduce your income by that much. Mm-hmm. And then if you're married, I think it's $24,800. So if you own a home, it increases your chances to itemize. Now, the number, when Trump got into office, they pretty much doubled the number. So it's a very, very high threshold to meet. But if you want to try to itemize, then you can deduct for mortgage interest. You can deduct for property taxes. So those are some of the things that you can deduct. If you have a business and you own a home, then that's really, really benefit. And I didn't say this in the beginning, but a lot of the tax benefits, they go to business owners. They go to people who invest, because that's the government's way of trying to spur the economy, increase GDP, all that kind of stuff, and encourage people to spend money in the economy. Right. So they try to create these different tax breaks in order to incentivize you to do these things. So as a business owner, again, you could take that home office where you can deduct a portion of the mortgage interest on your business, the property taxes, the utilities. Even if you buy you have that home, you buy furniture for the business, you could deduct that. If you buy a computer, all those kind of things that you put into the home office, then you can reduce your tax liabilities there by owning a home.
Okay, now back to the small business, and then I'm going to take some questions. A lot of people have been putting down questions down here, so we want to take some questions. In terms of what your firm does, do you guys take on, do you do the transaction, like the yearly at the end transaction, and do a lot of small businesses come to you for that, or do you do like a retainer fee, or do you offer both? If somebody wanted to work with you, which one would benefit the most?
Yeah, so we do all those things. I would say what's going to benefit you the most is doing tax planning. So really with tax planning, it's just pretty much the process of going through, taking a deep dive into your life, your financial situation. And if you book a call with me, it's complimentary, it's free. So definitely take advantage of it. There's a link in my bio. On that call, I'm going to be doing a deep dive and getting an understanding of, okay, how much money did you make this year? How much money did you get last year? Do you have any children? How many children do you have? What are you putting in for retirement? What kind of insurance do you have? Do you have a business vehicle? Do you have an office? Like all these things I'm going to be asking you to get an understanding of how much I think I could save you in taxes. And then with that service, you know, we go ahead, we do the service, and it's in the and this is not like no flat, like it's pretty much customized for the individual. Like I pretty much assess and can tell, you know, what it's going to look like as far as the work's concerned. And with that, it's just a one-time payment. You pay that one time, and then I pretty much come up with a tax plan for like the next 5 years for your life. So like for the next 5 years, you'll be set. You'll know exactly what you need to do. When you start getting into real estate, these are the different strategies. This is how you exit out of property so you don't have to pay capital gains tax. This is where you need to invest so you can get some tax credits. This is how you pay your children. So all those things we help you with, and then you also have access to us for the year. So if you, for the next 12 months, if you have any questions, if you need to reach out, you want to have a conversation with the CPA and kind of figure some things out, then we're available for you then. And then of course we do the tax prep service as well. So if you want to do tax prep with us, we're more than happy to take that on. But I definitely try to push people towards the tax plan, because to me, that's honestly, it's an immediate ROI. So for instance, like hypothetically speaking, let's say you pay $500 and pay, let's say you pay for a tax plan for $500. It's not that much, but let's say it's $500.
Right.
And I can show you how to save $10,000. That's like an immediate ROI. Like immediately within that year, you can save that $10,000. You only have to pay that one-time $500 fee, and then you're pretty much straight. You're pretty much given strategies for the next 5 years. So that's one thing. With the tax prep, honestly, it's just like it's just the cost of doing business. There's no real financial benefit for you other than it just saves you time from having to go ahead and do the taxes yourself. Sometimes, you know, we could work with you and look at what you did for 2019 and be able to help you maximize what you already did. But again, if you didn't do the right things in 2019, then, you know what I mean, we can only do so much for you. So
okay, so would you recommend like the tax plan, and then at the end of the year when it's time to file, that's when they can do like more of the transactional, like, hey, come prepare my taxes, but they're actually working with you throughout the year, and they have access to you and your team, and they can contact you if they have a question. Or let's say you worked with them and they were making $2,000 a month, then 8 months later, now they're making 10 or 12. Now they have different issues and different things. They're trying to hire people, so that's when they will want to reach back out to you again and do. Would they do another plan, or would they just kind of, or are you guys going to follow that plan and say, hey, this is what you do when you make 10,000. This is what you do when you make 25. When you make 100, this is some of the things you want to start focusing on. Is that how you guys plan?
Yeah, pretty much. So we try to make it as comprehensive as possible. Honestly, when I go in there, I give you like everything. Like I pretty much do a brain dump. Like I pretty much give you everything to where, yeah, let's say that you get married. Let's say that you start hiring employees. Let's say that you end up getting in a position where you need to switch over to an SCorp. Like I pretty much give you everything I could think of. And I was like, yo, this is everything that you need to know. And pretty much for the next 5 years, whatever happens, you're going to be straight, unless they do like a significant change in the tax code. That doesn't happen. Like when Trump got into office, he created like the biggest tax reform in the last 30 years or whatever. So it doesn't happen that often. Probably when he comes out of office, a lot of the changes that he makes, a lot of the changes that he put in there are going to be good till 2026. And then some of those kind of start falling off or whatever. But I take those things into consideration too. So as much as you can give me, so like when we go on that call, I'm pretty much thinking for you, because it's like you, because you're so focused on your business and you're focused on doing your service and your product and helping clients out, you're not necessarily thinking about the next 5, 10, 20 years the way I'm going to be looking at it. I'm just like, have you thought about estate planning? Have you thought about having kids? How many kids do you want to have? What are your long-term goals with the business? And then that kind of helps me identify, okay, you're probably going to need this. You're probably going to need to know this. And that's kind of how it goes.
Okay, perfect. So we got a few questions, guys. If you have some questions down here, make sure you submit your questions. We got write-offs coming. This is a good one. You kind of talked about it, but what are some normal write-offs commonly missed first-time business owners?
Oh yeah, that's perfect. And I forgot to give you another acronym. I love acronyms because they help you remember, and it's easy to get this. So with taxes, as a business owner, there is an acronym that came out with to help you pretty much be able to operate your business tax-free. Okay, so maybe not. Sometimes you do have to pay taxes on the business. So I don't want to give you the impression that you never have to pay taxes, but these are tax-free write-offs that you could take with your business. So, and free, again, that's the acronym. So the first one is the expense. When it comes to deductions, the expense needs to be for business. All right, so anything that you spend related to your business, then you can deduct for that. So that's the F. So it needs to be for business. The next part of that is it needs to be considered regular for your business, okay? So if you are, let's say let's call it a real estate investor, right? And you're buying, I don't know, you're buying, maybe makeup or whatever the case is. That doesn't necessarily make sense. It's not regular for your business. Not to say you can't do that for your business, but it's not regular. So the IRS may question that. The next part of that is it needs to be considered essential. So you pretty much need to buy things that are pretty much essential, make sense for your business. And the last part of that is extravagant less, meaning that it can't be extravagant. You can't, let's say, like one of the things that you could deduct for business is meals. You can't just go out, have a meal. Usually a meal costs $150, $100. You can't go out, have a $5,000 check because you're getting, Dom Perignon and getting a whole bunch of crazy stuff and thinking that you could write off the whole thing. Like they're going to kick that back. So you want to make sure it's reasonable, it makes sense, and just like really thinking about, what is just really when it comes down to the tax code, you just need to be reasonable. So a couple of things you have meals that you can take as a deduction. You have miles that you can take. We didn't talk about miles, but mileage is another good thing. So one of the things that you want to make sure that you're doing is you want to track your miles. So you want to make sure anytime that you drive, or pretty much every time you drive for business, like let's say you're going to an event where you're promoting your business, you're vending at a table, let's say you're meeting a client, you can deduct for those miles. So you want to use an app. There's an app called Mile IQ. That's a really good app to use. QuickBooks also has an app that records the miles for you automatically. It's kind of like Twitter where you can swipe left, swipe right to say whether it's personal, whether it's business. Yeah. So that's another thing that you can do as well. The home office is a really good one. We talked about kids for a little bit.
Let me ask you this. This is kind of a personal question.
Yes, sir.
I work in media, and would I be able to deduct my haircut? Is it that simple?
It's not that simple. So that's kind of like that gray area.
I'm trying to save some money, man.
I feel you. That's kind of that gray area. Maybe if damn, like when like, so let's say maybe like a Steve Harvey. You remember when he had that fresh lineup with the fro and it was just like a perfect, and that was like kind of his brand. Yeah. That maybe in that instance I can kind of see it, but yeah, I would say, yeah, you don't want to push it. That's kind of like,
it has to be like full-on production, like a Hollywood movie or something like that.
I would say so. Yeah, so they need to give you the hair dye. It needs to be like, you need to be on a poster. You need to be in the movie. Like it has to be like something super serious. And two, like it depends on, part of it too, it depends on how much money you're making too. That's another thing to consider. So let's say you have a business and let's say you make $10,000 in the business revenue, right? So that's sometimes that happens, right? When you're first starting off. You don't want to put like, if you have a whole bunch of expenses, like if it's the disproportionately, like you have $10,000 in revenue, but you spent $100,000 in expenses, then you might kind of put yourself at risk of getting an audit. And another thing too that I want to point out, it's very important that a lot of people don't consider too, is with losses. So the IRS makes a very clear distinction on what's a hobby and what's a business. And you can't deduct things for business or for a hobby. So if they think it's a hobby, they're like, no, you can't it's personal, you can't deduct it. So one of the things that they do to determine whether your business is a hobby is to look at how many years have you had losses. So usually if you have losses in your business and it passes 3 years, like 3 consecutive years you're having losses, then the IRS may question whether that's a real business or whether it's a hobby. And again, like there's some legitimate reasons why you might have a loss. Even with this year, if people are getting losses this year, they might be able to understand that because it's just been a crazy year. But that's something to consider as well. So
what about apps like Cash App and things like that? When you're receiving payments, it might be for business. How do you even implement that into your revenue strategy? Because when I was first starting out, people were trying to pay me Cash App, and I'm like, no, go on my website and check out, or at least do PayPal. That's something I can track, PayPal for business. But what about apps like Cash App? What do? You just not use them at all?
So that brings up a very good point too. So I'm actually very glad you have to ask this question because this impacts a lot of things. So we talked about the LLC protecting you from your personal assets.
Right.
So one of the reasons why you could do that is because your business is separate from you personally. And the reason why it's separate from you personally, one of the things that they look at is, do you have a separate business account?
Right.
So income going into that account, the business account, expenses coming out of that business account or business credit card, it needs to kind of stay in one separate entity, because once you start commingling funds and it starts going like this, then they're just like, okay, there's no difference between you and the business, and we can come after your house. We can take your car. We can do all these other things. So you want to keep it separate. I wouldn't recommend Cash App for your business unless maybe, well, if the Cash App is connected to your business account, then that's cool. PayPal is a pretty good one because usually the way it's set up is they do a pretty good job of helping you get it connected to your business account. But yeah, I would say if you do have a business and you're collecting money, you want to make sure that Cash App account is connected to a business account like it. And usually it's going to say that the checking account is going to say business checking account. So Wells Fargo has one, Bank of America, Capital One, all the major banks, even like the credit unions too have one. So
this is a really good one, a little sophisticated. What's the tax implications on money you earn in a cash value life insurance policy?
So the money that you earn on a cash value life insurance policy, so I don't really, so that's one of the benefits of the cash value is you can grow and add money to and I'm not a big life insurance person, and I don't really deal too much with the tax implications of that, because really with life insurance, with the cash value, you're putting money into it, and that's growing, and it's kind of like, it works kind of similar to like a, what you call it, a Roth. So with the Roth, it's after taxes.
Right.
So you take that after tax money, you put it in there. And I believe with the cash value life insurance, you put money into it, it grows tax free, similar to like a Roth. And then that's the impact of it.
Okay. So
you already paid taxes on it when you put the money in.
So that's one of the benefits of it. That's pretty good. Let's see if we got any more questions. I guess this is not really a question. They asking if they can acquire on Instagram. Somebody, yes, follow him. I don't know if you can see it. I can't see it on mine, but make sure you guys follow him. I pinned it down to the comments. We got 2 more minutes and they're going to shut us off, man. So give everybody a call to action to check you out. We got a lot of business owners that follow us here. We got a lot of people who are at least interested in business. So you're probably going to be getting some, people setting up some phone calls or whatever. So how can they check you out? What should they do to get involved with what you and your firm is doing?
Yeah, absolutely. So definitely hit me up. I'm on Instagram, obviously, at michelvalbrun.com, MICHELVALBRUN, Money Making Mitch. You can find me, follow me. If you look at my link tree, I pretty much have all the information on there. So definitely feel free to book a free consultation with me. It's going to be, again, us going through your situation, understanding how we can help you save money on taxes. Check me out on YouTube. I have a ton of free content on there. I also have an free ebook on tax savings. I also released my book this year called Prolific Profit: How Successful Businesses Maximize Profits and Dominate the Market. based and inspired by the late and great Nipsey Hussle. So definitely check that out. Very good foundation for understanding business and accounting and taxes. And yeah, I'm pretty much available on all all platforms. So michelvalbrun.com, valbrungroup.com is the name of my firm, CPA firm, and definitely looking forward to working with you all and connecting soon. So
I saw a really good question that came up. I don't know if you caught that.
yes, sir.
It was talking about if you are a like if you stay in a different state, does that matter when you're dealing with accountants? Like, you know, if you're a lawyer, you can only do business in your state or whatever, depending on what type of law you practice.
Right.
Can you work with people all over the country?
Yeah, so we work with people all over the country. So really when it comes down to the state, sometimes there are different state implications, there's nuances in different states. But yeah, we work with people from all over the country, California, Texas, New York, all over the place. So yeah, that's not an issue.
All right, perfect. Guys, go follow him. Thank you. I learned so much from this, man. So if you ever want to come back on, if you got something else you got going on, you want to educate us, because I know a lot of people going to hit me in DM and ask questions. I am going to save this. But again, if you want to come back on, if you got something you got going on or whatever, make sure you hit me up, hit my team up, because I learned a lot from this live, and I know from the comments, a lot of people learned a lot from this live, man. So I really appreciate your time and you and your firm sharing your knowledge with us.
Absolutely. Appreciate your time, King. Thank you all. I appreciate it. Looking forward to connecting again, man. Appreciate you. Later, bro.
All right, thank you. Have a great day.
Thank you.
Oh, okay. Let's exit off of here.